Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spotted. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
All right, guys, we had quite the FOMC day yesterday. That was one of the wildest FOMC days I've ever seen. Hold on here. I am not getting the sound. I forgot to turn on voice meter here so that I can hear the music too. I hope it's good music. Oh yeah, it's a pretty good song. Anyways, that was one of the wildest FOMC days that we've had. Today we have the ECB. We've got a lot to talk about. The market liquidity as I speak is pretty light. We are going to be getting the jobless claims here in a moment, which was a pretty big mover last week. So let's go through these charts very, very, very quickly here. ZN, you can see how much we moved, and they have continued to move up in the overnight session. Here in the S&P 500, not quite as much, but man, did they take off in the S&P. And we got oil. Oil is kind of benefiting here as well. Gold and silver really, really like that, although it doesn't quite claw back all of the downside that we had, 2 weeks ago. Copper also doing well, and the Japanese yen really, really spiking on there, and the dollar down here below, dropping below 103 now. Heading for 102. Man, is 100 in the dollar finally in sight? I don't know, but this whole thing is a little bit wild. So just for some oh no, wait, let's not go into that yet, because we've only got a minute here before we get the news. Let's see here. So for the and we get retail sales month over month as well. Okay, so for retail sales, we're expecting a negative spot 1. I actually think that might come in at positive spot 1, but let's see. An initial jobless claims, they're looking for a reading of 220K versus a previous reading of 220K. I also suspect that one might be slightly lighter than usual. So let's see. 20 seconds here.
Ten seconds.
Okay, so retail sales was spot 3 versus a negative spot 1, and initial jobless claims was lower than expected as well. So it was right on both counts, 202 versus an expected 220.
Month over month, 0.2%, 0.3%.
I find it
0.1%.
really fascinating that lately, oh, you know what, let's turn the news squawk off. I don't want to talk over him. Almost every piece of data that we've gotten in the past 2 weeks have basically come out in the way that makes the market the most interesting, right? Okay, so there's some iceberging happening there at 09 already. That could be a spot that we turn The downside here was a little bit limited. I would expect it to not be like super crazy. I mean, because that with that Federal Reserve meeting and everything, there is probably still going to be some people that want to buy. I am going to be watching very closely what the S&P 500 does today, because there was a lot of margin calls yesterday, and I think that a lot of quality will end up getting sold here by the hedge funds that just getting destroyed by their shorts. The dollar did get a pretty decent boost from that too, by the way. And gold selling. I find it very well, I need to come up with the different adjectives, right? The gold and silver, the metals, have been reacting much more strongly to all of this than the treasuries have. Yeah, there's some size that evens, even if we get... Oh, yeah, that's a pretty big one, too. Yeah, it just reminds me of those huge orders that we came to. It was like, well, they're up there. Maybe that's a target. That's a long ways away. I'm not going to worry about it too much. Saw a spot. Maybe I could try going short. No, it was a terrible idea. I had to puke it. And I wasn't sure about it. I mean, I put that on my experiment account. I didn't even want to put it on my serious sim account, right? But they blew through it. I ain't seen anything like that in a long time. They just busted through those big orders. I don't know. I 112 even could be in the cards, though. I don't think it's unreasonable. They definitely did bounce, at least temporarily, off of those orders down there. I think part of my problem here today, I haven't been trading this maybe as much as I should have. I probably could have gotten some out of that trend yesterday. I've been really surprised by these. But we got ECB press conference coming up, right? So I'm not quite sure how to square that away with, how we might want to play this tactically. Normally, I would just wait until the ECB is done and then maybe we get something. But usually don't get something after that, so... And I think one of the things... So, going through and reading all of the analyst reports, the thing that stands out to me is the number of these analysts and so forth that I was reading that were basically saying that, like... this is a huge pivot from 2 weeks ago before the Fed speaker blackout period came through. It is just purely dovish, and what is going on that tells the Federal Reserve that they need to flip so dovishly? The zero hedges theory is that Joe Biden gave them the tap on the shoulder or something like that, which I really don't think that Powell would respond to something like that. Maybe subconsciously. Maybe they kind of get convinced by somebody or something. I don't know. Maybe they say, well, okay, yeah, we can kind of be dovish this year. It wouldn't be a huge deal. Maybe that's... But it is just so strange to me that the Federal Reserve is like, yeah, market pricing is very, very different from ours. We're not really too concerned about it. Doesn't really matter. After they had talked about how the tightening was beneficial to them before. How are they not concerned about, inflationary pressures coming back because you go dovish too early or the market front runs it too aggressively, But the way that most of these analysts are kind of reconciling that in their minds is saying, well, actually, the market is right, and the Fed was wrong, and the Fed is coming closer to the market, and maybe there is a reason for them to be concerned. And that's where I'm starting to have an issue, is when I look at what the market has done over the last month, what I see is a market that was oversold, coming and flipping around really hard and being overbought because of CTA strategies, and not because there's stuff in the data that suggests that we really need to bring those interest rates back or we will create a recession. So that's kind of where we're at. Liquidity is still not very good today. Well, I think we need to pull the ECB up here. That was weird. Cover up the menu. I need to see that. Coming, reading around here. What's this? Brendan Carr, last year, after Elon Musk acquired Twitter, President Biden gave federal agencies the green light to go after him, and they have. Today, the FCC adds itself to a growing list of federal agencies engaging in the regulatory harassment of Elon Musk. Can you prove that? You're a seller, but it must be seen. I don't know, man. So, one thing that will happen after these kinds of events is people will come in and say, yeah, we moved up really, really big today. We're going to have some mean reversion today. But it doesn't necessarily happen that way always. Especially after as big of a day as we had yesterday, there's actually just a lot of leftover flow that has to continue buying today. So I would keep that in mind. Of course, the ECB is usually not like a huge market mover, as not as huge as what we had yesterday, but you know, they still have the potential to kind of throw a wrench into things here. Would note that Norges Bank, they raised their interest rate, the central bank, surprise raise. So oh, this is about the Starlink decision. Gotcha. Hmm. Yeah, this is a good question. Will Laguard follow Powell into early dovish capitulation? Hmm. Mohammed El Arian noting or saying this is a notable beat for U.S. retail sales. It is a spot 3 versus an anticipated negative spot 1. Does suggest that holiday buying has been stronger than anticipated. Like, this is the thing, is like, okay, what has happened in the past 2 weeks? Did we get like some dovish data or something? I don't remember that. I remember there being some dovish data a little bit further back that kind of had me being like, guys. But now I'm seeing like unanticipated continued strength that makes me very skeptical about the Federal Reserve's ability to reduce interest rates. Like I kind of, so here's how I think this plays out now, given the current trajectory, because the market is pricing like almost 100% chance of a decrease in March now. I think that they do a cut in March and then aren't able to do any more after that. That's what I think is going to happen. I think that there's so much fluff out there that you give them even one cut and it'll be too much. And I think that the retail sales kind of just plays into that. Jimmy Oreo, I think that the public polls are misrepresenting what the actual public opinion is. This on if the primary was today. I think that they probably are too, both in the primary and the general election. I don't think that Joe Biden's campaign is in as much trouble as the polling suggests. And one thing that I would be cautious about if I was a Republican is that right now we're getting, high interest rates. Like, consumers should feel squeezed. That's the whole point of raising interest rates, right? So the way that they feel about the economy right now may not necessarily be how they feel a year from now. If we start to get easy monetary conditions, people's opinion might shift. I don't know if there's enough time to really change the opinion. I mean, a lot of people's opinion of Joe Biden is probably really set by now. But I do think that their bearishness about the economy is likely to adjust, unless we have a recession or further inflation, which are both things I'm very concerned about, right? So Bitcoin had a bit of a drop, but are recovering quite nicely, along with gold and silver here. Pretty much like the whole market following along. Okay, here's Laguard coming out here. I love the way that they did, like the stage that they have set up, and the way that all of the journalists come up and take the picture. It's like, yes, let's get another picture of her in the same position, but in a different outfit, so that we can prove that we were there that day. Okay. I'm going to turn the news squawk off here. They're still playing their music, so... Okay, here we go.
Good afternoon and welcome to our press conference. On stage, there's President Christine Lagarde and Vice President Luis de Guindos. My name is Wolfgang Preußel. I also welcome the participants that are online. If you take your questions, please turn on your cameras and your microphone. And with that, I would like to hand over to President Lagarde, please.
Thank you very much, Wolfgang. And I'm going to preface the reading of the monetary policy statement with asking for your indulgence.
She looks a little tired today, doesn't she?
I would not have wanted to miss this last press conference of the year with you, nor did I want to miss the Governing Council meeting of yesterday and today. But it may come a point where I start coughing my life out.
Oh, she is sick.
My Vice President, dear Luis, has agreed that he will just take over. As simple as that. But I'm not contagious, rest assured.
I'm not okay.
Acute bronchitis.
That's so totally me. Is like, yeah, I know I'm coughing and but I'm not contagious.
Vice President and I welcome all of you to our press conference. The Governing Council today.
Now before today, I always was like, she's not 70 or whatever.
While
How old is she?
inflation has dropped in recent months, it is likely to pick up again temporarily in the near term. According to the latest
She's 67.
staff projections.
She's not. She don't look 67 to me.
Inflation
Well, she does today, but
to
before
decline
today, she didn't look
gradually over
67.
the course of next year, before approaching our 2% target in 2025. Overall, staff expects headline inflation to average 5.4% in 23, 2.7% in 24, 2.1% in 25, and 1.9% in 26.
I tell you what, man, bronchitis takes it out of you.
This amounts to a downward revision for 23 and especially for 24. Underlying inflation has eased further, but domestic price pressures remain elevated, primarily owing to strong.
Did she call them mystic price pressures?
Eurosystem staff expect inflation excluding energy and food to average 5% in 23, 2.7% in 24, 2.3% in 25, and 2.1% in 26. Our past interest rate increases continue to be transmitted forcefully to the economy. Tighter financing conditions are dampening demand, and this is helping to push down inflation. Eurosystem staff expect economic growth to remain subdued in the near term. Beyond that, the economy is expected to recover because of rising real income, as people benefit from falling inflation and growing wages, and improving foreign demand. Eurosystem.
The whole tone of this makes me feel like I'm in a church or something like.
0.6% for 23, to 0.8% for 24, and to 1.5% for both 25 and 26. We are determined to ensure that inflation returns to our 2% medium-term target in a timely manner. Based on our current assessment, we consider that the key ECB interest rates are at levels that, maintained for a sufficiently long duration, will make a substantial contribution to this goal. Our future decisions will ensure that our policy rates will be set at sufficiently
SHC, how's your day going? It's okay. We're just watching the ECB press conference right now. I think I'm gonna kind of sit on my hands until that's through.
Data-dependent approach to determining the appropriate level and duration of restriction. In particular, our interest rate decisions will be based on our assessment of the
Yep, it's live right now.
in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission. The key ECB interest rates are our primary tool for setting the monetary policy stance. We also decided today to advance the normalization of the Eurosystem's balance sheet. The Governing Council intends to continue to reinvest in full the principal payments from maturing securities purchased under the Pandemic Emergency Purchase Programme during the first half of 2024. Over the second half of the year, it intends to reduce the PEP portfolio by 7.5 billion euros per month on average. The Governing Council intends to discontinue reinvestment under the PEP at the end of 2024. The decisions taken today are set out in a press release available on our website. I will now outline in more details how we see the economy and inflation developing, and will then explain our assessment of financial and monetary conditions. So, turning to the economic activity. The euro area economy contracted slightly in the third quarter, mostly owing to a decline in inventories. Tighter financing conditions are subdued foreign demand are likely to continue weighing on economic activity in the near term. Prospects are especially weak for construction and manufacturing, the two sectors most affected by higher interest rates. Services activity is also set to soften in the coming months. This is due to spillovers from weaker industrial activity, fading effects from the reopening of the economy, and the broadening impact of tighter financing conditions. The labor market continues to support the economy. The unemployment rate stood at 6.5% in October, and employment grew by 0.2% over the third quarter. At the same time, the weaker economy is dampening the demand for workers, with firms advertising fewer vacancies in recent months. Moreover, even though more people are in work, the total number of hours worked edged down by 0.1% in the third quarter. As the energy crisis fades, governments should continue to roll back the related support measures. This is essential to avoid driving up medium-term inflationary pressures, which would otherwise call for even tighter monetary policy. Fiscal policies should be designed to make our economy more productive and to gradually bring down high public debt. Structural reforms and investments to enhance the euro area's supply capacity, which would be supported by the full implementation of the Next Generation EU programme, can help reduce price pressures in the medium term while supporting the green and digital transitions. To that end, it is important to swiftly agree on the reform of the EU's economic governance framework. Moreover, it is imperative that progress towards capital markets union and the completion of the banking union be accelerated.
Now they're pushing up to the highs.
Inflation dropped over the past 2 months, falling to an annual rate of 2.4% in November, according to Eurostat flash release. This decline was broad-based. Energy price inflation fell further, and food price inflation also came down, despite remaining relatively high overall. This month, December, inflation is likely to pick up on account of an upward base effect for the cost of energy. In 2024, we expect inflation to decline more slowly, because of further upward base effects
Special notices? I don't know what you mean by that. I'm going to say no.
aimed at limiting the repercussions of the energy price shock. Inflation excluding energy and food dropped by almost a full percentage point over the past 2 months, falling to 3.6% in November. This reflects improving supply conditions, the fading effects of the past energy shock, and the impact of tighter monetary policy on demand and on the pricing power of firms. The inflation rates for goods and services fell respectively to 2.9% and 4%. All measures of underlying inflation declined in October, but domestic price pressures remained elevated, chiefly because of strong wage growth together with falling productivity. Measures of longer-term inflation expectations mostly stand around 2%, with some market-based indicators of inflation compensation declining from elevated levels. So what's our risk assessment? The risks to economic growth remain tilted to the downside. Growth could be lower if the effects of monetary policy turn out stronger than expected. A weaker world economy or a further slowdown in global trade would also weigh on euro area growth. Russia's unjustified war against Ukraine and the tragic conflict in the Middle East are key sources of geopolitical risk. This may result in firms and households becoming less confident about the future. Growth could be higher if rising real incomes raise spending by more than anticipated, or the world economy grows more strongly than expected. Upside risks to inflation include the heightened geopolitical tensions, which could raise energy prices in the near term, and extreme weather events, which could drive up food prices. Inflation could also turn out higher than anticipated if inflation expectations were to move above our target, or if wages or profit margins increased by more than expected. By contrast, inflation may surprise on the downside if monetary policy dampens demand by more than expected of the economic environment in the rest of the world, and in the rest of the world worsens unexpectedly, potentially owing in part to the recent rise in geopolitical risks. So let's now turn to the financial and monetary conditions. Market interest rates have fallen markedly since our last meeting and lie below the rates embedded I'll start again. Market interest rates have fallen markedly since our last meeting and lie below the rates embedded in the staff projections. Our restrictive monetary policy continues to transmit strongly into broader financing conditions. Lending rates rose again in October.
Dude, this is like the longest summary of economic conditions in a press conference ever.
Higher borrowing rates, subdued loan demand, and tighter loan supply have further weakened credit dynamics. Loan to firms declined at an annual rate of 0.3% in October.
But treasuries are pushing higher.
Also remained subdued, growing at an annual rate of 0.6%.
You think she'll make it through this?
Weaker lending and the reduction in the Eurosystem balance sheet.
Let's start taking bets on will Christine Lagarde make it all the way through the ECB press conference?
In October, it fell at an annual rate of 1%. In line with our monetary policy strategy, the Governing Council thoroughly assessed the links between monetary policy and financial stability. Euro area banks have demonstrated their resilience. They have high capital ratios and have become significantly more profitable over the past year.
Am I spelling her name
Financial
right?
stability outlook remains fragile in the current environment of tightening financing conditions, weak growth,
Lagarde.
and geopolitical tensions. In particular, the situation could worsen if banks' funding costs were to increase by more than expected, and if more borrowers were to struggle to repay their loans.
Now there's a poll.
At the same time, the overall impact of such a scenario on the economy should be contained if financial markets react in an orderly fashion. Macroprudential policy remains...
Oh man, you guys are really voting on that one.
against the buildup of financial vulnerabilities, and the measures in place contribute to preserving the financial system's resilience. So, in conclusion, the Governing Council today
No, just that she will have to
ECB interest rates
decide that she's too tired or not doing good and passes it off to the vice president.
returns to our 2% medium-term
She's not going to die in the
in
middle
a
of it,
timely
of course
manner.
not. It's just bronchitis,
Our
guys.
current assessment, we
That's
consider
not
that
a concern at
rates
all for
are
somebody
at
that's
levels
67 years old.
maintained for a sufficiently long duration will make a substantial contribution to the timely return of inflation to our target. Our future decisions will ensure that the key ECB interest rates will be set at sufficiently restrictive levels for as long as necessary to ensure such a timely return. We will continue to follow a data-dependent approach to determining the appropriate level and duration of restrictions.
The market hasn't really seemed to have reacted. They were kind of sold off, I think, because of the retail sales. And now they're rallying during her speech. I don't think it was anything that she said, but rather like because she's not coming out and being hawkish, the market reads that as naturally dovish.
Medium-term target and to preserve the
We'll
smooth
see.
functioning
I think that you might get
transmission.
similar to what happened in the press conference yesterday, where
Take your question.
all of the press tries to goad her into being hawkish and she just passes.
Vice Bucket, CNBC, Annette, please.
Wait. Get my papers in order.
Oh, you're not ready for the question?
Obviously, two questions. The first one is on the market expectations about the future rate trajectory, especially after the Fed yesterday was quite explicit about the potential of 3 rate cuts during the course of next year. So what's the ECB's thinking? And then the second is on the PEP. Is the PEP a prerequisite, or the earlier stop of reinvestments or fading out of reinvestments, is that a prerequisite for having rate cuts? And does that make them also likely to start in March? Thank you.
Really
Thank you very
not a fan of the liquidity here, man.
But let me remind you one thing. We are data dependent. We are not time dependent. We are data dependent. And let me take you into the Governing Council room. As you remember, we have defined the 3 key criteria of our monetary policy stance, namely inflation outlook, underlying inflation, transmission, strength of the transmission of our monetary policy. And it is against those 3 criteria that we determine whether enough progress has been made and whether our monetary policy is working. And clearly, when we look at our inflation outlook, we look at the projections produced by staff and the entire Eurosystem on the occasion of the December meeting.
Jeez.
Our new projections see inflation at 2.1% in 2025, not 2026, which is included, but 2025 we see headline at 2.1, and the path to get there is flatter than it was before, which lower the risks of inflation expectations risking.
That last little push higher was really
On underlying
jolting.
inflation, it says quite specifically in the monetary policy statement that a lot of indicators are showing that underlying inflation comes below expectation, with a decline across all components. And when we look at transmission,
Russian drones in Romania?
a strong transmission to the financing of the economy, and strong transmission at large, particularly if we look at the volume of loans to both corporates and households. So, should we lower our guard? We ask ourselves that question. No, we should absolutely lower our guard. And I'll give you two good reasons for that. The first one is that
So she took the bait in a way that
our
Powell
inflation
did not
outlook, which
yesterday.
is one of the three criteria.
I'm not going to say that that's a
It's
huge deal,
conditioned
but it
on
is different.
interest rate path that was embedded in market data at the time when our cutoff date was determined. Cutoff date, as you will see in the publication, was November 23rd. So that's point number one. Point number two, when we look at all the measurements of underlying inflations, there is one particular measurement which is hardly budging. It's declining a little bit, but not much. And that is domestic inflation. And domestic inflation is largely predicated by wage. So we need more data. We need to understand better what happens there. And why is domestic inflation resisting? To understand that, we need a category of things. Number one, we need wage data. And that is going to be measured in multiple ways. We have really as wide an area of indicators for that. The wage tracker, the number of job offers, the vacancies, the turnaround, plenty of them. And that, of course, determines how tight is the market, and therefore how wage will behave in the next few months. And when we look at the data that we have now, it is not declining. Compensation per employee has declined from Q3 to Q2, that's true. But the other indicators, no. So we need to have a lot more data in that regard. And the second element, which is critical, given the way we have constructed our projections, the way staff has constructed projections, we need more information about profit unit as well. Because our projection is predicated on the assumption that a lot of the catch-up wage growth will actually be absorbed in the markup of enterprises and corporates. So we need to have these two on a more sustainable basis, demonstrating that domestic inflation too is going to head down towards our target. We don't have that yet. We will have a lot more data in the course of 24. It will be particularly rich in the first half, but we will need that in order to determine whether it is actually sustainable or not. Now, you had a second question, which had to do with PEP. Let me just tell you how I regard the decision that we made on PEP, and that was shared by a very, very large majority of the governors. Everybody was fine with stopping the reinvestment at the end of 24. Some would have liked a slightly different tapering, starting a little earlier, starting later. So we ended up with that 100% reimbursement until the end of June, 50% reinvestment from July until the end of December, no reinvestment from January onwards. This is really balance sheet normalization. It's a good moment to do that. We have little by way of fragmentation. Markets have absorbed our decline in APP reinvestment.
Thank God the reporter didn't ask questions. She's really going off with this one question.
It's really on a standalone basis, and it will continue to operate on the back burner, if you will, without, we hope, being significant. And that's how we came to that decision. But it's totally unrelated to, oh, if they do that with PEP, then maybe they're planning on this on rates. No. Rates are the primary tool, and we're going to use that independently of what happens on the PEP side, which, as I said, is on the back burner.
Thank you, President Lagarde. And the next question goes to Balazs Korani of Reuters. Balazs, please.
Good afternoon. Thanks for taking my questions. First question relates to the discussion. Last night, Jay Powell said that in their discussion, rate cuts have started to come into view and were definitely a part of the discussion.
So I have a random question. How cold or warm do you think the ECB press conference room is? It kind of looks like a really open, cold room to me.
The second question is related to what you said a few weeks ago. You said you don't expect rate
They've got bright lights on them. They're all wearing suits and everything, but they don't look hot.
That view, or do you think data since then has evolved to a point where you would no longer keep that view?
Thank you very much for your two questions. On the first one, it's very easy. We did not discuss rate cuts at all. No discussion, no debate.
We did not discuss rate cuts at all, and did you notice that the market sold off when she said that? I mean, it was 3 ticks, but they definitely traded that.
Of hold. You know, it's like, I don't know, solid, liquid, gas. You don't go from solid to gas without going through the liquid phase. So this was just not discussed. I think going forward, we are going to continue to be data dependent. We are going to continue to determine meeting by meeting what we see on a totality of data. But obviously, given a certain resistance of domestic inflation and the risk of second round effect that we absolutely want to avoid, we're going to be very attentive to that category of data that I have just described.
Thank you, President Lagarde. Jana Rando from Bloomberg. Jana, please.
Good afternoon. I have to come back to the rate outlook. You mentioned that a lot of data will arrive in the course of the first half on how wages and inflation will develop, and
I wonder if this maybe flips around now.
Right around that time. So I would be interested in your view on whether that seems like a reasonable point in time to change your view on what kind of policy path for interest rates is needed, and whether that would be a good moment to consider rate cuts. And the second question I have is on something you mentioned in your introductory statement. You said governments should rein in fiscal support, or otherwise monetary policy might need to be tighter. Do you have any particular country in mind with that? Thank you.
On your latter question, we don't have any particular country in mind. I think we have the principle in mind that the fiscal support, particularly the discretionary support that was granted to compensate for the high prices of energy, that should absolutely be withdrawn. When you look at how fast the price of energy has gone down, both on the oil and gas front. It's just totally unjustified and probably unjustifiable to continue to have those fiscal measures in place. But no particular, no identification of any particular country. I think we make the point in that same paragraph, if I just go back to it, that we strongly encourage the reduction of the sovereign debt, but I'm sure you will find that reference. Let's see. Anyway, we make the point that fiscal measures must be rolled back, that sovereign debt must be reduced, and we make another point, which, as you will have noted, because you're a regular of this monetary policy statement, we have changed the language on structural reforms, and we have done that because we perceive and we fear a level of procrastination in reaching agreement, in closing on some of the technical files which have been pending for way too long, and which would be critical in order to support the competitiveness of the euro area. You will see when we publish the data that competitiveness is really weakening, and whether it's capital market union, whether it's banking union, or the whole market union and free movement of goods and services, a lot of progress needs to be made, and that point was made very clearly. The Vice President is a very strong supporter of that, and there were many voices on the Governing Council to say, in the presence of Valdis Dombrovskis, who is working on those issues, that's clear. It has to happen.
Clear the 10-year here so that I can kind of get a better idea of how far you're going here.
On your first question,
I mean, they have pushed back now quite aggressively,
it is
but
true that we will receive
still above the open
data, in the first half of 24. So it will be data rich, particularly on the employment front. Just consider that there are about 50% of the employees that we cover under our wage tracker who will see their collective agreement renegotiated, a new terms of employment and possibly new wages will be agreed. And in the same vein, in the corporate world, whether it's for goods or services, terms and conditions, price lists are often revised also in the first few months of any calendar year. But it's not to say that this will be it. We will remain attentive to a whole host of data that will come in the course of 24. Thank you.
The next question goes to Martin Arnold of the Financial Times. Martin, please.
Thank you very much. I have two questions, President Lagarde. Firstly, if I could just ask you about comments that Fed Chair Jay Powell made yesterday evening. He said that there was the risk that they would hang on too long with rates at the current level. And he said they were very focused on not making that mistake of holding on too long at a high level. Do you share that concern? And secondly, if I could ask about market expectations and market pricing in a slightly different way. Do you think that the current market pricing, which is for the ECB to cut rates 6 times next year, starting from March, is that reasonable? Does that seem fair to you? Thank you.
Thank you, Martin. On your first question, who wants to hang on for too long? But equally, what we are saying today on the basis of the forecast that we have produced by the Eurosystem staff, we don't think that it's time to lower our guard. And we believe that there is still work to be done, and that can very much take the form of holding. And I think in our monetary policy statement, we refer specifically to sentences that, they don't have a particular magical virtue, but now, of course, I find the fiscal comment that I wanted to refer to. So essentially what we say, and we have said that before, and we are repeating that same sentence, we say, based on our current assessment, we consider that the key ECB interest rates are at level that, maintained for a sufficiently long duration, will make a substantial contribution to our goal. And we continue with, our future decisions will ensure that our policy rates will be set at sufficiently restrictive level for as long as necessary. If you combine that with our data dependency and the fact that we are not, narrowing the focus or the focal of what we look at, but we know that some data and a combination of data and the mechanics between these two, wages and profit in particular, are going to play a significant role, and we will be particularly attentive to those. But there will be, more data coming in. We will have another bank lending survey. We will have, a corporate telephone survey coming in. We will take that into account to determine, when we can lower the guard, for sure. But that's where we are at the moment. Now, your second question, of course, I'm not going to address it directly. I will simply say that we will be looking at our three criteria. We will be identifying whether, on the basis of staff forecast, on the basis of our measurements of underlying inflation, on the basis of our strong transmission of monetary policy, we are at this medium-term target that we have set for ourselves of reaching the 2% target at the end of our projection. We are probably a little bit more severe with ourselves because the end of our projection or the end of the projection horizon would take us to 2026, where we have 1.9. We are going to probably look very carefully at the end of 25, and I think end of 25 we're at 2.1. And we arrive on a more sort of sliding basis to that 2.1%. That's what we are going to be doing. And, as I said, projections that we have now is conditioned on the interest rate path that was embedded in market data before the cutoff date. That cutoff date was November 20.
Is she okay? No, she is not. She has bronchitis. So she is not.
And the next question goes to
She is not herself today, for sure. She is so slow and yeah.
Good afternoon. Thank you for the opportunity.
It is a little weird, isn't it?
On
Yeah.
entering a recession.
This has been like the most
with growth picking up, but
boring ECB press. She did say something that basically smacked the market back down.
Your decisions
But
today
job dedication.
on interest rates.
Yeah, well, it was like we were saying at the beginning, because people were saying, oh, she always looked old. Like, guys, she's 67. I think she looks really good for 67.
Of defense against fragmentation risk, and you said before it's a good moment. This sounds big news that fragmentation risk.
But not today. She looks terrible today.
But can you say a bit more about
I picked up on that immediately.
Well, first of all, let me say that we do not have a recession in our baseline. And of course, I'm not looking at specific countries. We are looking collectively at the euro area at large. Our mandate is not to cause a recession. Our mandate is to reach the medium-term target of 2%, which we've defined as price stability. And to do that, we know that we're going to have to continue with financing that will be triggered by the interest rates that we set. That financing will necessarily dampen demand. We are seeing it. So we take all the macroeconomic data and the whole situation into account, but we are driven by delivering on our mandate. So on PEP, first of all, don't forget that as long as we reinvest, so meaning 100% of redemption coming to maturity, as long as we reinvest, we still have that flexibility. It was one of the attributes of PEP. And that flexibility applies to the 100% reinvestment until the end of June, and then to 50% of the reinvestment until the end of the calendar year 24. We believe that PEP has served its purpose. It was intended for the pandemic. It was an emergency program. Despite stupid COVID that comes to hit you now and again, as it did hit me, pandemic is over. The WHO has declared so. The emergency is no longer around.
There again. She is not giving the same line that Powell did yesterday at all. She is doing what I expected Powell to do. She's not being overtly hawkish, but she is kind of saying, like, look, things are pretty good right now. Why would we be so dovish?
Would not hesitate to use for a second. Because
I don't know.
Proper transmission is actually part of the mission.
I know that it was a joke, but I'm liking Akshay's conspiracy theory yesterday that Powell just wanted the Christmas break to be nice, so he held off on the hawkishness.
Okay, thank you very much for the opportunity to ask my 2 questions.
Did he just take over? The
German government has just passed some kind of savings package that includes a higher carbon tax, for example. And to what extent...
No, I don't think he just took over.
Inflation in the Eurozone.
He was just asking who the next person was going to be.
If I understood you right, the main driver for the relatively stubborn...
So I wonder when she was like, you know, the pandemic is over, the crisis is over, etc., etc. I wonder how these people that are still doing it from coming into the press conference from home feel about that.
Something else. Thank you.
Why are you still doing remote?
Thank you very much. On your first question...
Okay, she did. I thought maybe he said that she was taking over, but she's still there.
Decision came yesterday. We have not figured those numbers and their forecast into our current projection. And obviously we will do so, and we will try to understand exactly what impact it would have. Germany is a big country. It represents roughly 25% of the euro area. And fiscal measures that would be taken, need to be accounted for, and their impact on inflation determined. So we will do that. Thank you for finishing with the wage and profit question, because it's something that staff both here at the ECB but also in the National Central Bank looks at very, very carefully. And what we have seen is a contribution from profit unit to inflation declining over the course of 23. On memories, the contribution was about 2.4, and it's now down to 1.4%. If that is confirmed, but it's a big if, and we need to really understand and make sure that this is sustainable. But if that is confirmed, it would mean that the hypotheticals that we had in our previous forecast and that we have for this forecast in December, which was that markups would be reduced in order to absorb increased wages by way of catch-up or otherwise, that is actually taking place, which would be really good news for inflation purposes. But we don't have enough on the table to really determine that this is what is going to happen. We will. Thank you very much. And if that was the last question, let me just wish all of you happy holidays, Be safe, look after yourself and your family.
Okay, she did make it. She did make it. We just dug her up for the press. She probably was thinking like, I have to do it because that will instill confidence in markets and this and that. Give the poorly. I agree. Well, you know what? I really like her. I honestly do. She is an extremely flawed. She is an extremely flawed central bank president. No doubt about it. But like personality wise, I really like her. She she is a very good communicator. She she has this a really key factor that I think you need in a modern president that Jerome Powell just doesn't have, man. Like, it seems to me like every time that we're doing the press conference with Jay Powell, that like he just doesn't seem to understand the market and how the market is going to react to him and how to craft what he says to get the intended effect. And so we're always left with this thing where like the model that the markets is using to interpret what's going on is not the same as the model that Powell is using to go out and say things. And we get this disjoint all the time. And I think that was very much on display yesterday because, the market interpreted Powell's comments as objectively dovish. And I don't think that his intention was to keep it dovish. I think that his opinion was, let the market do what they want. We don't care. It's kind of where he was getting at, which, I mean, it is weird because they were in the previous meeting, seemed happy about that financial conditions had tightened finally, but whatever. She's funny. I think that it's just her comments and everything are funny. I get that. I really feel like there's over in Europe, there's this whole thing that's like elitism against her because she's not qualified enough to do it or something like that. But I think that the ECB made the right choice in that one because honestly, like, you realize that the Federal Reserve is like the real game, right? Everybody else is just kind of adjusting things relative to the Federal Reserve and are dependent on the Federal Reserve for maintaining the global financial system for the most part. And so I don't think that you necessarily need to have the smartest economist wonk in there. I think that having a strong communicator is better. So I like her. But she was sick, and you could tell for sure. Okay, so now that the ECB press conference is over, the big question in my mind is, will liquidity come back to the market or not? We're still below 2000s, and I am really weary to trade this because we have had so many slips of like 4 or 5 ticks on, well, there was some on some of her actual comments, but there was also some that were just on nothing, especially when we were up there at the highs. So I am very, very wary about, taking on too much risk here. Now, the S&P 500, they did end it on time and everything this time. So ending right as the S&P 500 goes. So we'll get to see them doing some stuff. Yeah, this is a precarious situation. So this is one of those times where, like, I can see there's slightly more viewers than there usually is, right? I think that a lot of traders, there's movement in here and everything, and you're going to want to take trades, right? But I would caution, wait for a situation where you really know what the flows are going to be. because there's probably going to be a lot of really whippy action that makes it very difficult for you to keep your positions. This is what I would be anticipating right now. Okay, so there was a little bit of an iceberg there on the offer at 13. The price action since the press conference ended has actually been pretty tight here in the treasuries. The S&P 500, who knows? There was a decent pop on the open by about 10 points or so that very quickly came back. My reading of the flows is still long, but I don't think that we have enough information to really conclude anything yet. Nah, she's a clown. You know, here's the other thing. I find it really funny, the standard that the public holds all public figures to is just a very unrealistic standard. Like we seem to think that this is especially true if you're like into the conspiracy theory stuff. It's like, well, because these people are like masters of the universe and control everything and all that stuff, they must be perfect people. No, they're just people, man. They're just people. She does a pretty good job of it. Jerome Powell has his flaws, but he's done a pretty good job of this. He's an S-tier Fed president because of the shut the effing door thing. I think that the reality of it is this. It doesn't matter what they do. You'll always be pissed off. There's always going to be something about the economy. If interest rates are easy, then you're going to be concerned about how it's going to create inflation and all these things. And when it's hard, you're gonna complain about how they let the economy get into this situation in the first place. It's just, there's always something to criticize about the Federal Reserve, because the reality is that it doesn't matter what the interest rate policy is at the time. There is some group of people that are harmed by the interest rate policy and some group of people that benefit from it, right? There's not really some optimal interest rate policy stance where everybody equally benefits all at the same time. It just doesn't happen. So there's always a group of people that are upset about the interest rate policy, and it changes so often that basically you get people, especially if they're not like super into it, but they're just kind of a news watcher and a finance watcher, and they're watching interest rates. They're always going to hate the Federal Reserve. This is how you get these people like far right conservatives that think that the Federal Reserve should just be done away with, for instance. It's because you're always going to have something to complain about, but I don't think that they realize what the alternative is way worse. Okay, well, now that she's done talking, they are coming back up a little bit. I'm not really seeing the flow come along with it, though. So that's Goldman Cultist Days popping up. Well, it goes back to this whole thing that's like, politicians aren't people, right? Politicians are figureheads. It is part of a group of people, organizations that are special interests, as well as strategists and so forth. And the politician is just the figurehead of that. That's how you're able to have these people that are like literally senile, but they continue to be in the Senate making decisions and stuff, is because their staff does everything for them, right? But there is still a person there. There is still a person there. It's just that person is not who you think of as the politician, Joe Biden or whatever. And it's the same thing with these policy people, right? Like Jerome Powell. The difference here is that the performance that they make, the performance that Jerome Powell and Christine Lagarde make in these press conferences has a much more direct and immediate effect on the markets and everything else than the performances that the politicians put on. That's the only real difference. They should just raise... I'm sure you would love that. Make 1% per month on your passive investments. That would be nice. That would be nice. Akshay said they should just raise interest rates to 12% and keep them there permanently. 1% for each month of the year. That would make a lot of calculations easy, wouldn't it? Why, when you start community like Discord? I do have a Discord. It's in the video description. Yeah, politicians are just holographs of the lizard people who live underground. Oh, man. I was watching, Tucker Carlson is on TikTok now. Now that he's launched his streaming service and everything, they're going like whole hog into it. And he had an interview with some other conservative news kind of guy. And they were talking about the aliens thing again. Basically, the question was to Tucker was, are there things that you've been looking into or that you've been thinking about covering that like scare you to cover? And Tucker Carlson said, actually, yes, there is. And one of them was the election. But then the other one was aliens. He's like, I've seen some stuff, and not just like I read them online, but like I've come across some, like, I don't know, interviews or information that was sent to him or whatever about aliens that he found very disturbing. And like, I don't want to tell my family about it because like, why would I shoulder you with like something so dark, sort of a thing. And I don't, they were like really vague about it, which was kind of weird. It's like, well, why don't you just talk about it right here then? I think that what they were talking about was this whole thing that you see in the UFO circles where they say that like the aliens that we're seeing are really kind of like what we think of as demons, and that like Earth is some sort of like soul harvesting mechanism or something like that. I think that's what they were talking about, but are you talking about the lizard people kind of made me think about that. because they're all saying like, oh yeah, and the government is totally complicit in all of this. And, yeah. The flat, I don't know where do the people get that. Okay, the flat earth thing, that one is so weird. Do you realize that the whole flat earth conspiracy theory basically comes down to one idiot on YouTube getting popular enough and then a bunch of other people jumping on board it? So this is one of the things about social media that I don't think I've completely figured out. To what extent does social media simply amplify things that are already popular versus it actually making something popular? I'm not able to tell. When it comes to the markets, for instance, it seems to me that YouTube only started pushing the finance and day trading stuff when it had already become popular. When it had already become popular because of GameStop and because of the Wall Street bets. So it was Reddit that kind of made it a thing, but YouTube just amplified it. But in the case, from what I can tell, of Flat Earth, like the originator of this was freaking YouTube. I mean, there's always been flat earthers around, but it was really like this one guy that said like, no, this doesn't make sense. Here's my model of the universe. Put it on YouTube, and then it created this whole freaking thing. Before, you know, I think it was a long time ago. It was a really long time ago, but before YouTube stepped in and started throttling them and everything else like that. So the flat earth one is kind of weird. Lizard people is something different. So I don't think that there is like some group of people that are actually lizards and are like trying to fake us all out and everything. But there is really weird and interesting stuff that I think have kind of led to people thinking that there's lizard people out there. Right? An old David Icke thing? I don't know. But like when you go in, so like the lizard people conspiracy theory is interesting to look into, because they get into certain instances and things that we know about elites that don't really have good answers. So like there is something there. It's probably like really mundane and not that interesting, but people have filled in the blank with this fantastical theory. There's a lizard people. Yeah, no, that's what you're right. That's what they say, is the lizard people are the dinosaur equivalent of Homo sapiens, and that's what dinosaurs evolved into, and they have psychic powers to brainwash and control us. You know, that is what they believe. The UFO thing is interesting, okay? Like we had earlier in the year some wild stuff come out, and then it's kind of like gone dead again, but that story's not over, man. There is something crazy going on. There's something crazy going on, and I don't think that the government themselves completely understand what's going on, and I hope that we get to the bottom of it in my lifetime. Literally the plot to the first live-action Super Mario Brothers. Yes, it is. That's funny. You have to be lost hard on the ground as a child to believe this sort of thing? I think most of these things, yeah, well, I think that part of what happens, though, is, like, again, the internet kind of amplifies things. I don't know if there's really that many people that truly believe that, like, there's lizard people out there, right? But it's like, just think about me with the UFOs. Do I believe that there are UFOs out there and that the government has them and has been hiding it from us, and they've been working with what are essentially demons now for like decades, and and all of this sort of stuff. No, I don't believe that. But there is all of this lore from people that will post on the internet claiming that they're in these programs and telling us stuff about aliens. And I really enjoy reading it, and I find it all really very, very interesting. And I do think that there probably hidden somewhere in there may actually be some truth. Like there may be some people that did host some snippets or little bits, and then other people are kind of morphing it. Right? But there is something there to get to the bottom of. I have no clue what it is. And again, when we find out what it is, it may turn out to have a very mundane and boring explanation. But the answer is probably not going to be nearly as interesting as we think. Right? But so it's like, I don't believe in it, but you can certainly see how it kind of perpetuates itself, right? Because if somebody posts something new, I might still participate in conversation. So to that extent, you are kind of contributing to it, right? Well, the UFO lore that's out there is basically that aliens are actually exactly like the little gray aliens that we've always kind of been popularized in conspiracy theory stuff and everything, and that they are basically harvesting souls to some extent, that they understand something about spiritual energy. So there's this spiritual component to the UFO lore now that's really weird and doesn't make a whole lot of sense. It's the commies, they're poisoning our fluids with fluoride. Okay, now fluoride is one that I get. You know what? This thing so sucks because this is one of those places where my understanding of the science is not adequate enough, and I don't think that the research that we have is adequate enough. But I am almost positive that there are plenty of substances that we are putting into our body daily that are harmful to us. And there has been some research about fluoride hurting IQ and things like that. And it's super weird that there are some localities and people that are so insistent on having fluoride in the water. I don't like that one at all. I believe that 20, 30 years from now, people will be horrified that we packaged food in plastic. I think that as things go on, we'll realize more and more how harmful plastic has been. Because we think back on like leaded gasoline. Like it was crazy that leaded gasoline was allowed to be a thing. Or that we made so much stuff with asbestos. But I think that in the future we will find out that plastic is just as bad of a mistake. Yeah, the whole PFAS thing is insane because they come in and say, oh, the government allows a certain amount in it and it's below this certain amount. But they've done studies that show that you're getting harmful amounts of these chemicals even below the federal regulation levels. That it doesn't take very much of this substance at all for it to start disrupting your hormones and things like that. Yeah, they're making this is the other one is like, I don't understand why they're making the frogs gay became the meme. Because they're turning the frogs gay was like one of the most true things he ever went on a big rant about. And it wasn't even like a controversial thing when he said it. Right? Like they had already, yeah, I guess it was the way that he said it. It was accurate, and like the whole thing about the so let's go into this. Okay, here's my recollection of this story. This is another one of those things where it's like, I'm always surprised at how much information you remember. So I'm sure that I probably have some things wrong, but I'm going to try and wing it here. There was this lady, and she did some tests because she was a biologist and whatever, and she was finding that some of the amphibians were turning female, and tried to get to the bottom of it and found that it was a chemical in the water, and the plant that was putting this chemical into the water did some crazy stuff to try and silence her. And then several years later, more information came out and basically completely proved her right, that there were chemicals being leached into the water by this particular chemical plant that was changing the gender of the frogs. And that kind of sparked off this whole discussion about how could chemicals in our water supply right now from things like birth control and so forth be potentially affecting us, because we know that like male fertility is going down and testosterone is going down and all these sorts of things, although there's probably a lot of different things that are contributing to that, right? So this had already come out and had been like well proven at that point, like a year or two before he said that. And then yes, he comes in and they're turning the frogs gay, and that was like this controversial thing again, when anybody that had been following this, because it was all on Reddit and everything, knew that what he was saying was correct. It wasn't a conspiracy theory. Is there any chance that you could add the... Sure. I will put the word the here on the screen. The. Oh, that you could add the bid-ask split? No. That's interesting that you ask that. So why do you want to see that? So, when I first looked at that feature, I thought that it would maybe show me like, oh, you know what? Actually, there's buying on this edge of the range and there's selling on this edge of the range. And this, when I look at it from in the context of whether they were buy or sell orders and make a volume profile, I can see where support and resistance are and things like that. But what I found was that it mostly just follows what the volume profile is and is pretty random, other than that you get these distributions. And I did not find any use behind it at all. But the main reason I'm not going to put it up there is I just don't really feel like I have room. Like, I think that everything that I have up there on that top row is stuff that I need to trade. Did you watch Christine Chanel? Are you talking about Lagarde? Oh, you didn't come in until after that. Yeah, we did watch that. She was very sick. She did push back against the dovishness in the way she basically, her press conference was more like what I expected Powell's press conference to be yesterday. Not like push back super aggressively or trying to say anything like super significant, but batting away these questions that like, oh, like, so what, everything should just be easy now? No, we still need to ensure that inflation comes back to target. She did say a few things that pushed the market down at the time, but it looks like it was a wash, like it was insignificant. Yeah, I'm already see short-term resistance and support on it. That's all. Yeah, I don't think it shows you that very well. So here's the thing. So if you haven't watched this yet, go and watch my video on the inelastic market hypothesis. So I'm gonna try and summarize it here. So I don't know if what I'm gonna give you here is better or worse than the video that I have. Okay, but basically, these guys, they went and they did this study and they said, if I put $1 into the market, how does that change the total market cap of the stock market? Because according to like your basic theories of fundamental analysis and all of that, if I put $1 into a stock, that should move the market cap of that stock up by $1. And then that should move the market cap of the market as a whole up by $1, right? But they started kind of doing this analysis, looking at how, correlated assets work and everything else. And they found that if you put in $1, you're actually increasing the market cap by $5 to $8, which is really insane if you think about it. That whatever it is that you put into the market, that increases the market cap of the stock market 5 times more than what like your typical theories of fundamental analysis and everything would suggest. That's really crazy. And so these authors, basically the conclusion that they came to was that markets are inelastic, that financial markets are inelastic. So what does that mean, inelastic? So elasticity is a measure of how supply and demand reacts to changes in price. So if we move up, then that should mean there are more people willing to sell at that level. The people that produce that good, they're going to want to produce more of it because they've got this nice price, etc., etc. So if we move up, then you should get more supply, and that will bring price back down. So the supply reacts to that demand and brings things back into an equilibrium, and that's what we call an elastic market. So if the market reacts very quickly and strongly to a move up in price by causing it to mean revert, then you have a very elastic market. So what would an inelastic market be? It's the exact opposite. Think of it as like a rubber band. If you got like, here's the fundamental price and here's like the like people trading, and we get far away from it, that rubber band is going to make that come back down together, right? But if price is inelastic, what that means is that rubber band just stretches, and then, the rubber band is loose around your fingers at that point. That's an inelastic market. So what does an inelastic market mean? What it means is that support and resistance isn't really very useful for trading, because it's so easy for the market to bust through them, right? That's why what I would recommend you focus on is not seeming support and resistance. I mean, you will see it. There will definitely be points where you'll see a little bit of absorption and they don't go through it and they bounce off of it, right? Totally. It totally happens. You can trade it. It's not a very profitable strategy, because when the flows come in, when new orders come in, they don't give a shit. They will bust through your support resistance line, whatever it is that you're looking at. They don't care, because they have to buy it. And the market will react very strongly to their buying. And so that effect is so strong that it's basically pointless to look at almost anything else. Whatever edge that you're going to derive from everything else is just going to get washed out when those new orders come in. To the point that you really, if you're not being able to see those new orders, it's just long-term profitability is just not practical. So focus on, what do I know that can possibly predict future orders? And the way that I think of, if you have charts and stuff, the easiest way to think of it is, what is cumulative delta going to do? Try and predict cumulative delta. Are we going to see some buying and bust the highs and see cumulative delta rise by 10 to 20K? That's a possibility that I'm kind of looking at right now. Although I think that we're probably going to stay within this range for the next hour. Probably, I'm not expecting a huge imbalance between the buys and sells yet. But it could happen. They could bust highs, and that could cause a little bit of a race. I could also see some selling come through. We did get a little bit of selling right there in the 5-year. And now we are getting some flattening in the yield curve. So that might also, if we get some of those more of that flattening flow, that could push us down, right? And so that's what I'm looking for. And it would be the same thing as like if we were to have a decline, I think I'd probably see 10 to 15,000 contracts sell And then that would be where I would want to get out, because that's the extent of flow that I'm anticipating in this kind of a situation, right? Because when you see volume coming in an area is just not very reliable. They just don't hold very well. So that's kind of why I approach it the way that I do. Lots of people disagree with me. I think most retail traders will disagree with me, but I think that the data is on my side. Well, there was some big prints up here, by the way, when we were at those highs. We might make a beeline down to 115. It does look a little bit weak. I'm not seeing any kind of correlations here. One thing I am seeing is that gold is looking really good today. How much is gold up today? Let me switch my thing around. It's up 3.21%. That's really good. Can you believe it was $68 a few days ago and now it's 72? Wow. RTY big winner, so the small caps are finally bouncing back. That's cool. Silver adding to its big gains from yesterday, 1%. Gold did start by selling, but they recovered and pushed higher. The treasuries, they were kind of in line with the treasuries, but the treasuries, it wasn't enough for them to bust the highest, whereas in gold it was. So far in the treasuries, well, I mean, there was this move. Let's analyze this a little bit. I do need to analyze this a little bit. So if I come back to my chart so this was the ECB. We went from basically 1,000 to negative 25. So 25,000 contracts sold on the ECB press conference, only to buy back by about 30K. But that 30K was not enough to bust us back above like 112.21. So it looks like some of our upside is a little bit capped, because that's a lot. That's a lot of flow to come in and not move up. Liquidity has improved though. We are seeing 2000s put out there. So does that change my mind about anything? Well, I don't think that I'm confident enough about what the flows might be from here for me to try and take a trade, but I am kind of suspecting that we might see a little bit of a short in here. I don't think I really want to take a short, because yesterday was a big up day and you might see some more flow come in long. So I think that I'll just sit on it. Maybe if we get some long flow, I might try and participate. So I'm kind of making a little bit of a strange call here, in that I'm not necessarily saying that I think that there's going to be an imbalance between buy and sells. I could see both scenarios happening, but I'm more interested in participating if we continue to move up, because it's in line with the larger momentum in the CTAs and everything. New to Jigsaw. Well, yeah, so I think the whole thing is if you watch my order flow series and watch all of it, because the first little bit is really just me explaining to you what you're looking at, right? When I get into the later videos, then I actually explain how the market actually tends to move and why it does that, right? When you have that information and you know that stuff, and then you come in and you watch the treasuries and interpret the treasuries every day with that information in the back of your mind, you'll pick up on what's going on a lot faster. If I think that the kinetic war dude is correct, should I buy phosphorus stocks? Oh, I was phosphorus stocks. I was actually watching. Okay, this is something interesting. I learned yesterday. It was actually, I think, something really important that I learned yesterday. defense stocks are kind of like consistent plays. Like when you get into a defense stock, it's like you make 10% every year or whatever the amount is, right? And it just consistently performs. So like there's the federal budget and they just get a percentage of the federal budget and it just consistently goes up with the federal budget. So it's not like, hey, if I think there's going to be a war, I should go and buy Northrop Grumman, or like moves like that do happen in the short term. But from what it sounds like to me, those moves are pretty inconsequential relative to what you make from just buying and holding those. So basically what I'm saying is, don't try and pick a stock based on what you think the next conflict is going to be. Just pick a defense company that you think is run really well and buy and hold it. For explosives, and if they want to get fancy for chemical warfare as well. I think that if I was making a play in a stock right now, I would want it to be a small cap. I mean, I'm prone to like small caps anyways, but and you know, listen, when it's a trend, maybe it's not the trend that you want to jump on. But the trend today is absolutely small caps coming back. I'm a little bit pissed about it because the small cap that I had gave up before, you know, they should have hung on. You hear me, Sumo Logic? You screwed up. You shouldn't have sold. You should have held on for another 6 months and then you'd be fucking rich. Oh well. Oh well. Yep, it was Sumo Logic. I'm really pissed about it because I thought they got bought out by some private equity guys. I thought that they have a good, well, I still think that they have a good product. And I also feel that they would have been a great acquisition target for somebody else, like Microsoft. So Azure is great, but there are some weaknesses in the ecosystem, really for all of the ecosystems. And I think that like logs and monitoring is one of the biggest gaps. And if any of these were to buy, if you know, Amazon or Microsoft were able to buy a product and just bring it in-house, like Sumo Logic, that would be like a game changer for them. But didn't happen. Didn't happen. Yeah. So now I'm thinking if I want to get like a smaller cap tech, I should go into security, right? Ooh, actually, I don't think I have that on my list. So let's come and look at that. HashiCorp, DocuSign. I think the one that you want is CrowdStrike, right? Let's see here. Right here above India. Wait, did I do that right? No, I did not. There we go. Military. I know there's a few. I'll have to go and compare them, but well, it dropped a little bit and came right back there to 17. So they might balance here. I'm not seeing any signs of it yet. So maybe they're gonna just bust. Maybe they're going to bust the highs here. I am working on integrating platform application logging with MS Sentinel, right? Oh, goodness. So like where I'm working, we've been having problems where like the application just runs out of memory, and the telemetry and information that I can get just from Amazon and the systems that we had was inadequate. So we had to make some changes and stuff for us to be able to do things like get core dumps and more logging within the application to see what was going on. So I think that's like right now in the tech space, what has kind of happened was the cloud came along and was like a big deal, and all of a sudden everybody moved their stacks into the cloud. So it was like, how do you create a build and everything that deploys your application into the cloud? And I think that people have kind of got that one down and have figured that one out. And so now the frontier, the place that IT hasn't figured out and is still trying to optimize and get working correctly, is how do I monitor and manage the apps once I have them in the cloud? That's why site reliability engineers get paid so much right now. I don't think that I will be as valuable as I am 10 years from now. It'll probably still be paid well, because I think part of the reason why you get paid well is because there's a lot of stress when you're dealing with the problems, right? But I don't think that it will be as in demand 10 years from now, because right now the tools just aren't very good. And once we sort the tools out, then that will kind of relieve some of the pressure. Yeah, Azure. Yeah, so with Azure, you do it yourself. Totally. With Azure, you get like a Elasticsearch or something like that. And then that means that your developers have to build the telemetry stuff into their application to send that information out correctly. And then what they do the first time might not be what you actually end up needing to solve the problems. I work in the UK, and a lot of tech contractors and government get paid. So there was this thing from the All In podcast where they were saying that like the way that the government does contracts is basically like they pay you for work and not a result. They say, oh, we want you to work on this thing, and we will let you work on it for X amount of time, and then you have to, we'll give you a certain amount of margin of profit. So it's like, you'll make 5% or whatever the deal is, right? And so basically what it does is it encourages all of the contractors to be inefficient. So definitely what you're seeing in the economy right now is a lot of money is being spent by government and being given to contractors and politicians' buddies. We don't realize it. That's kind of the funny thing, is it's not something that people are talking about. But with the Biden administration, people that are working in government or for government are doing the best in the economy right now. Yeah, the best kind of work, suck the taxpayer without doing anything. I always hear people talk about things that like productivity gains. You're not going to get as much great productivity gains as you did in the past, and it's not keeping pace with inflation anyways or whatever. But that's not true. Actually, wages relative to productivity have kept pace. You just have to what is the word? You just have to account for all the correct factors. But like, where is this company out there that's like super efficient? I've never seen it, man. When I worked for Goldman, I felt like I was always concerned about Am I doing work right now? Am I doing everything that I can to get everything through? And I was always very concerned about that, but I still found myself waiting on other people, and it was just like very, very stressful. And then I went to other places, and you know, they're just worse about it, but nobody cares, right? So I was like, especially the place that I worked for after Goldman, I'm like, okay, I could have gotten this thing done earlier this morning, but I kind of lost my focus and it didn't get done until today, or whatever the deal was, right? So then I rush, make sure that I get my thing in, and nobody else did shit, you know? Or like, I'll be, I'm working really hard on this thing and I want to get as much of it done, and I didn't get it done before I had to go on vacation, and I'm really concerned that, like, you know, then they'll do all these other things, and then I will be behind. I won't understand what's going on at that point because they kind of moved on without me. But I'll be gone for a week and I'll come back and nobody did jack squat. Nobody did a single thing about it. I'm like, what are you people doing all day? What are you people doing all day? Are you waiting on other people like me? Because I don't feel like that I get as much done as I could. And it's not because I'm lazy or I don't want to. Like, I have the medication, I can do it, but it's like the organization and everybody else is like holding me back. I feel like that all the time. And I saw this thing on Reddit. They were saying, like, you guys don't understand that, like, if for a lot of autistic and ADHD people, like, what you consider to be 100% is not what other people consider to be 100%. That, like, other people's 100% is actually your, like, 60 or 70%. I was like, oh, well, maybe that explains it. Because I don't feel like I'm like a super hard worker and all that sort of stuff. But I can't argue against the performance. I've gotten stuff done, and they've been very happy with it everywhere I've been. Isn't that funny? Shorting GS based on Seth's insider info that everyone is lazy. No, this is not they're lazy, man. That's the sucky thing about it. One of the things that I think will happen to a lot of people is they're all waiting on each other, and the person that actually is supposed to be doing something at that time doesn't realize that that's them. That's the one that I hate the most. Because I'm the kind of person, I learned this early. Oh, I tell you what, man. I use names. So my first, like, boss, there was this guy named Andre, and that guy was effing crazy. Okay, like, when you have an ambitious boss, holy crap. Because it was always about, and we were doing like Jira stuff at that time. It was always about, like, hey, do you think that you could get this system to work with this system by Thursday? Well, we'll try it. Because a lot of that stuff is just like trying a bunch of stuff and changing configuration files and trying every possible combination until it works, you know, because nobody's done it before. There's not documentation on it or whatever. There's no way to know if it actually works with it, right? But he was like, oh, you know, even though this isn't really like what they hired me to do or what my group's position is, here I see an opportunity to be in control and be the head of like the entire software development lifecycle process. And they push you, man. Oh, and so it was always kind of like this back and forth. Like, there'd be a period where you're waiting on something, and then there'd be this period where boss needs something tomorrow, and you've got to work as hard as you can to get it. You know, man, when you have an aggressive boss, right? Oh, people at Goldman are so ambitious. That's what I would call it. That's different from everywhere else. But the problem is that they still have the same organizational inefficiencies, if not worse, because it was so hard to get any code submitted there. Like if you wanted to make a change to the actual trading systems, like if you wanted to make a one-line change, that was going to be like 2 weeks of work of other people testing and stuff. It was crazy. It's just, so it's like they do the same thing. It's just you feel differently about it, right? When you're at Goldman, you still feel stressed out about it, whereas at other places, it's kind of like, well, I'm doing everything that I can. Clearly, nobody else cares. It's just like, I don't get too much of that in my current job because my current job has mostly been putting out fires 24/7. So. Oh man, so I thought there for a second they came all the way back up from, where was it, 15? They came all the way from 15 back up to the highs very, very quickly, and they immediately backed off. So even though the liquidity is better, we're getting 2000s and everything, when I'm looking at how closely price is reacting to the volume that's in there, I still see a very illiquid market that I just absolutely hate trading, because it was just as likely if you had gone long at 15 there that you would have gotten a quick move that comes all the way down and back out, and you stopped out and then it comes back to where you were. That can be really, really frustrating. I had a friend at Goldman. They expect you to rake yourself over the coals to prove your worth on the vague hope of one day becoming a partner. Yeah, so this is something that, like, it very much depends on what you're doing there, right? Like, nobody in tech was under the impression that they were going to become a partner. Maybe if you wanted to be on the track that you were going to be a manager of some sort, then you'd get there. And it was always ambitious people that did it. I tell you what, they knew that they had to be ambitious to get it. It wasn't just like you do your best job and then maybe at some point you just end up being the right guy for the job and then you get it. That's the way that it is in a lot of other places that I work, because it's just like all of a sudden everybody realizes that this person is actually would be good at the management stuff, and we put them in it. Because in typical software plays, when you let the most ambitious guy get into it, it's usually not the guy that you want to do it. Not in tech, man. Right. But there are other groups, especially if you work in the back office. I don't think that I would, from what I had seen, at least, I don't think that I would have enjoyed or would have made it working in the back office. Because you know that you're basically always going to be in the back office, and they work you to the bone doing boring shit, frankly, that you would probably get paid more almost anywhere else. Right? That was kind of my impression from the people that I knew in the back office that did that, is it was like, it was a whole lot of stress for why? Nothing. You weren't going to get anything from it. I don't know why these companies are so glorified. Well, but they aren't what they were. That's the first thing that you got to understand, right? So Goldman Sachs in particular, what happened with Goldman Sachs was after the 2008 crisis, the government decided, you know what, you guys are actually really important to the financial system, and because of that, we need you to be bigger. So one of the things that happened after the 2008 crisis to Goldman Sachs was they were forced to become what they call a financial holding company. So now they have these different segments underneath of this major financial holding company, and they had to spin up new segments and stuff to fill in the spots, because before that they were mostly just like the biggest prime broker, and that was it. You know, they of course they had like an investment, you know, what do you call it, the big wigs, the guys that worked to the bone but they make millions of dollars, right? Yeah, they have one of those. Investment bankers, they have those, but that wasn't like where their money was coming from, right? They forced Goldman to size up a lot, right? And when they did that, I think that there were some things about their culture that didn't scale well. When they were a relatively small company, having this back office that worked really, really hard and was hyper efficient was like a really big part of their edge. Basically, that company was able to make a ton of money with not having to have a ton of employees because their employees were just all so good. And they did pay you for it. They did pay you for it. They didn't pay you for it with your salary, but what would happen is the bonuses would come along and the bonuses would just be insane, right? But when they sized up, I'm not going to say that it's not worth it. Like, you still get pretty decent bonuses and stuff when you work there. I got great bonuses when I worked there. But, for a lot of people, it's not worth the stress. It just didn't scale. And you can kind of see how now, a couple years later, especially when Goldman tried to expand into the whole credit card lending thing, and they just were absolutely dismal at it. Right? You can see that they are not the same company that they were. They were forced to get bigger, and when you're bigger, you can't be that hyper efficient all the time. You just can't. The organization is too complicated for that. So they're shown in a good light. They exclusively recruit from like Oxford, Cambridge, and equivalents of other countries. So that builds the prestige in markets as doing good, helping governments, etc. Instead of telling them that they grease palms. Well, no, I think the thing that sets Goldman Sachs apart from other companies, and I'm sure that JP Morgan and some of these other banks are to this somewhat, are like this to an extent as well. But the thing that really sets Goldman Sachs apart is their belief in their purpose. Oh, you're talking about McKinsey. Yeah, okay, yeah. But Goldman Sachs believes that its mission is to, bring capital markets to people, to create growth and opportunity for the world. That's what they believe that their part is. And every person that works there understands how what they do every day plays into that and how important it is in the entire world economy and how it benefits people's lives. And it does. It objectively does. But they understand that in a way that no other company I've ever seen does. And that's why you get the employees that behave the way that they do. It's because they understand the purpose. Oh, they were talking about Goldman. I don't know how we got into that. We were talking about your productivity as a worker. Like, not at my current job, because at my current job, so I haven't been making TikToks a whole lot, right? Part of it was that I just kind of got sick of TikTok. But the other part of it is that, like, if I have an idea, it's like, oh, I can't do that right now. I'm doing this thing. So, like, I've been too busy to really make TikToks during the day at my current job. But my previous job, I kind of felt like, oh, I could do a lot more. I would love to take on more responsibility. And they're like, oh yeah, totally, we'll do that. And then they do that. And I still feel like I'm, what is everybody else doing? Because I feel like I'm waiting on y'all to do something and it doesn't quite make sense, So, does your current job have the right incentives? Well, so with the current job, I don't think it's so much about incentives. So, what I do is I'm a site reliability engineer, right? So, basically, what that means is when the website is down and is not working correctly, for instance, something that will happen sometimes is we have systems that allow salespeople, like at a car dealership, to text the people that they're selling to at that time, right? Well, what if our system doesn't send the text messages out? That's a big problem, right? So when things like that happen, we're the front line. And of course, that usually means that we're talking to some other team, right? But we're the ones that are responsible for digging in, coordinating everybody, making sure that this problem gets solved as quickly as possible. So when there's an ongoing issue, you're spending all of your time looking at and trying to fix this issue. Even if it's just listening, being in a call with a bunch of people and listening to what the conversation is going and, trying to find information as other people are talking, so that does not afford me a whole lot of downtime. It doesn't. No. It's a different thing when you're talking about productivity, right? But I am the kind of person that will tend to just be hyper productive, just naturally, because I get bored if I'm not. But I also don't have very good focus. So what you usually get from me is bursts of productivity instead, right? It'll be like you kind of drag your feet all week, and then you're like, oh, you know what? I can do this, this, and this. I'll do that. And you do it all in one morning, and then everybody's like amazed at how much work you got done. And you're like, what are you talking about? Like, what? It was like that at my last job all the time. And I thought, oh, everybody else is just being lazy. But I think I've since decided that wasn't actually the case. I've since decided that a lot of it just has to do with the organization of it all. That things go at a certain pace, and if you just understand what that pace is and proceed at that pace, that it's easier to keep that consistent roll, and you can keep yourself balanced so that you can push when you need to. And I'll also do things like, I remember there was these things where it was like, okay, we're having this problem. Well, you know what? We could do this. That would be a quick fix. Let's just do that. And then be like, well, why don't we do it the right way? That wouldn't be that hard. And then they're like, well, I don't know how that would work. I'm not familiar with that technology. Maybe we can come back in a year and do that. And then the meeting will end. And especially if it's like a guy if it's like the lead developer or something like that, and tells me something like that pisses me off. So then I'll go and I'll just speed run the afternoon and go and write it and then put it out and be like, look, it does work. F you. Every once in a while I have one of those, but that's what we were talking about. And then we were talking about, like at Goldman Sachs, we weren't necessarily more productive at Goldman Sachs. It's just that you always constantly felt bad about how not productive you were. Nah, they're not paying me extra to do that. I mean, I guess I could say it paid off because I am like, look, I don't, maybe I'm wrong about this, but I don't think that I would make a good manager. I think that I have a lot of attributes that would be really great to have in a manager and would probably make me effective in the role. But I also think that there would be parts that I would completely screw up and would ultimately be my demise. Because I'm not very organized. I'm not good at keeping track of everything that's going on, and I'm not good at sitting in meetings and paying attention to what's going on. Right? But what I am good at is seeing the whole system and being able to make recommendations and being able to come up with strategy and tactics to be able to tackle those issues, right? So I am much better as a consultant to the manager, right? And then all I have to do is worry about what are the big issues and what should we do? And I can let the manager worry about how do we actually implement that, right? But in order for me to make more money at my day job, I would probably need to be a manager. I think so. To make more money than I'm making right now, you would either need to be managing or selling. So, that kind of sounds like a bad thing, but it's like a really good thing. I've done way better in my career than I ever really thought. I just wanted to do computer stuff and just kind of go along with it and constantly feel like maybe I'm not living up to my full potential, but then everybody's really happy with it. You know? I refuse to do management, hate meetings, people management, and wanting to stay close to the tag. I like the thing that will always drive me crazy is when again, this was kind of why I was getting at this. It was like at Goldman Sachs, you would get these managers that were ambitious, and basically they understood that like, hey, if you go and you make this system and you create it, now like you own it, and that gives you more career opportunities. That's good. And so you should never, when somebody comes along and says, hey, we need to do X thing, and a lot of computer guys will say, well, that's not our job. You need to go and ask these guys, or go and ask these guys. And I'm the one that's always going to say, oh, let's totally do that. Like, that will only be like, it'll only take us this afternoon, right? And then I can sink my tendrils into every part of it gives you power, and it makes you more, it helps you get paid more is the result. But I get a lot of managers that that don't understand that, right? So the manager at my last job, he understood that. He was probably the best manager I ever had. To be honest, I think he was the best manager I ever had. I really liked him. I stayed in that job way longer than I should have because I was like finally had a manager I thought was good. Right? Where I'm at right now, I just like everybody, and we're just like constantly working, and I don't even think that I have any insight into that sort of stuff right now. Yeah, I work remotely too. It's just really weird for me to think about, though. It's like your whole life they tell you like, oh, when you get into your late 30s and 40s, then you'll be at like your peak earning potential and you'll be able to do these. Now I'm kind of there, and I'm kind of like, okay, first of all, I don't know how I got here. And second of all, I'm not entirely sure what I'm supposed to do next now. I guess I'm supposed to go out and buy a really nice car, right? So I go and this is what I've been doing this week. This has been like I've talked about this before, okay? But this has been an ongoing thing over the past like 2 years or so, or whatever. Basically, trying to convince Google that I'm rich, right? So I will go and I will do searches, accept all of the cookies, and just spend time looking at things that are super expensive. I have no intention of ever buying them, but I want to look, So I'm like going on websites, looking up, $50,000 watches and things like that, right? And it will kind of go along with it for a little while, and it'll go on a binge, but then it'll kind of But so my binge this week has been cars. Because remember we talked about the Toyota Corolla GR. Looks like a fun car. Hard to find them. Don't know if it would really be practical for me to try and get one. So I'm going around, okay, well, what would be something else that I could, and I think the main thing is I want something that will be good in the snow and has a good sound system. Those are the two most important things to me, 4-wheel drive and good sound system. Well, turns out that the car that I have already is pretty good at that. Like Toyota doesn't have very good sound systems. The sound system in the GR isn't very good. I would, need to put a sub in it and do all of this, change the amp. I've never done that sort of stuff before. I don't know if I want to get into that, right? Who has a good stock sound system? Acura has good stock sound system. Stock sound system in my car is awesome. And it's like a 2008, 2009 TL, right? They make 4-wheel drive TLs, so maybe I just need to upgrade to the latest TL. I think it might come down between an Acura, an Audi, or getting a truck, or just not doing anything. Because the whole thing is I'm going through and looking at these cars, and it's like, okay, I could actually afford a pretty nice car if I really wanted to, but I honestly don't see the point of it. I'm like, what exactly does this car do that my car doesn't? Especially if it doesn't have as good of a sound system. I'm kind of like, if it doesn't have as good of a sound system, why am I switching cars? This is like that. But I did convince the algorithm that I'm rich, because now it's giving me ads for Bentleys and stuff. Bentley does web ads? What? Apparently they do. Lexus, I don't think I'd do a Land Cruiser. So one of the things that I'm concerned about, like for instance, if I went to an Audi, my understanding is that Audis, the whole Volkswagen group doesn't have the best reputation for maintenance right now, compared to Toyota and Honda, for instance, right? So, and then an Audi is crazy expensive to repair when you do have to repair it, right? So I'm kind of concerned about that. Otherwise, I would totally get one of the Audi 4-wheel drive ones. Subaru's pretty good with all-wheel drive, but their stereos suck. So, but I may just go to a truck. I may just get a truck. Maybe it really does make sense to get a truck. Go and get, of course, we'll have to see what the sound systems are like, but maybe I really do just get a Tacoma. But I don't have to worry about it right now. I think this is something, the reason I'm looking at it right now is because I want to buy one in 3 years, right? So if I buy a car in 3 years, then it will maybe be a 2023, 2024 model. But I'm not going to buy it right now. I think that I'm going to run my TL until it just won't run anymore, because I love that car. It's so funny. I got that car. I was like, okay, I want to have a car. I had to buy the car because I got divorced. My wife got the car in the divorce. I got the house. She got the car. Okay. But she knew she couldn't pay for the house. And she knew how important it was for me to get into a house. And she needed a car. So to her, it was a good bargaining chip. I think I got a good deal. But I had to buy a new car. And I was like, well, because I live here in West Valley and I have to go all the way up to Davis County every week to see my parents. So that's 30 minutes drive. I was spending a lot of time in the car. I need to have a car that's comfortable and that I can listen to my music really well in. And the Acura ended up being the perfect pick. And I got a crazy good deal on it somehow. And it still runs well. So I think it's perfect, and I just want to continue using that car until it doesn't make sense to fix it up anymore. I haven't even had any major problems with it, although I think a lot of that has to do with that since the pandemic and I'm not commuting to work every day, it doesn't get used very much. So that car might actually last a really long time. Maybe. You think it could? I shouldn't jinx it. It's gonna like break down tomorrow, and then I'm gonna have to go and get a new car, and I'll be super upset about it. Buy a lowrider and raise. Yeah, buy a Rivian. I really have no interest in an electric vehicle at all. I thought it was cool at one point, and the hybrids and everything, but I don't care about it. Like, I've realized that the only reason to get a hybrid or an electric car is so that you don't have to pay gas prices. And then you're paying so much more for the car that it doesn't really equal out. And you're not really actually helping the environment, really. So I'm just going to get a gas car. Problem with the new Toyotas and Hondas is they're all CVT hybrid junk. Now, you know what's been bothering me about cars right now that I've learned over the past week is apparently consumers don't like sedans anymore. If you go and you look at pretty much all of the major auto makers, their lineups have shifted very much towards either SUVs or crossovers. In fact, it's starting to get kind of weird because now what's happening is they're making like sedan crossover hybrids. So for instance, Toyota, they brought back the Crown. They used to have a car called the Crown like way back in the 60s or 70s or something like that. And they had the luxury sedan used to be the Avalon. Well, now they've brought this Crown in to take the Avalon's place. But it's not exactly like the Avalon. I mean, it is a luxury sedan, but it's actually styled like a crossover. Like it's up higher, all of these things. It's like this bizarre crossover sedan hybrid. And they're not the only one that's doing that too. Subaru also has one as the Crosstech, I think is what it is, that is also kind of a sedan crossover hybrid. Which is funny because a crossover was supposed to be a crossover between sedans and SUVs, right? Oh, man. Are you not saving the environment with an electric or hybrid car, less emissions over the life cycle? So, the problem is that the amount of carbon that is emitted in creating the car offsets the carbon emissions considerably. So you're not actually saving carbon emissions until you've driven the car for like X many years. So that's the first thing. And then the second thing is that these batteries require chemicals that are just like crazy. Like the cobalt mining is just like frankly immoral. It bothers me so much that we're putting cobalt in freaking everything, and it's literally artesian miners are pulling it out of the ground and nobody does anything about it. It's so wrong. My favorite thing with hybrids is, for instance, the Prius high voltage batteries will go into safety mode, making it useless if even one cell in the battery goes a little bad. Happened a lot. The SUV/crossovers comprise 50% of the total world market in 2018, and it's been growing every year. Yeah, see, I didn't realize. I used to think, before this year, before I started looking at this stuff, I used to think, you know, like, people don't buy expensive cars anymore. I think that everybody is, you know, being much more conservative about this stuff because I don't see cool sports cars nearly as much as I did as a kid. You know, I might see a Corvette like once a month or something like that, right? Well, turns out that actually people are spending probably even more on cars than they ever did. Is just they're buying expensive $150,000 SUVs, right? Like every time that I go out on the road, I probably see 3 to 5 Cadillac Escalades, okay? Cadillac Escalade is a $150,000 SUV. Wow, they came back up to those highs so quickly, dude. Oh, okay. It took 10 minutes, but I'm a little shocked that we're already back up here. It tempts me to buy, but the action has been pretty iffy. I don't think I want to mess with that. And that's right where, I don't know. Maybe it breaks out, but this is like right where they probably turn around if it's going to remain range bound. And then I started looking at like these Mercedes, right? I did not realize how expensive those Mercedes SUVs are. Yeah, why would people buy sports cars when they buy something more exemplary that shows off their midlife crisis even better? I was just like, this is what it is I'm sitting here like looking at this and realizing like, Seth, you need to have your midlife crisis thing now. What are you going to do for your midlife crisis? Because you're supposed to buy a nice sports car, and I just don't see the point. Unless I can get my hands on a Toyota GR for a reasonable price. That's some big icebergs up there at 19, man. A motor, maybe you're right. Maybe I need that's what I should do. So let me show you how it's done, guys. As you go over, you search for Ducati. So first of all, I've got to do it through Google so that Google sees me that I'm searching for it, right? And then if there's an advertisement, I absolutely click on the advertisement. I'm not getting that. Okay, it's just Ducati.com. Click on that. And then if it asks me to anything, I let it. Okay. Oh, you want to know where I live? Okay. No block. I mean, if it wants to send me notifications, F that. But, you know, or especially if it asks me for cookies. Yes, we'll do that. We'll definitely do that. Models. Oh, there's like a bunch of different ones. No, I'm not gonna get a Vespa. You think that I'm one of those annoying, snooty, yuppie French people or something like that's a European thing. We don't do that. You think that it's the Panigale? Panigale? Oh, that's pretty hot looking. $22,000, man. Configurator. Oh, it is Italian. but that's like those little things that you sit on, right? I don't think they even sell the nice ones in the US. What is it about the what's the difference between all of these? See, like here's this Diavel. What's that? I mean, that looks kind of cool, I guess. Monster. That one's cheap. That one's a dirt bike. Oh, no, Street Fighter. Ooh. Street Fighter V4 Lamborghini starting from $68,000. What? What? It's freaking green. I mean, if it wasn't green, I'm not really liking the green there, man. Jeez. That's an expensive. Superlegra. That one didn't give me a price for some reason. Super Sport. Super Sport, that is a little bit more like what I expected the Ducati to look like. Right? Dude, that is... Wait, let me pull the other one up. Ducati. How are they different? I can't really put a finger on it, but I think this one looks cooler. I think this one is way cooler looking. It's actually cheaper. This one's nicer. I like the looks of this one. I want something like, you know, something like that. Heck yeah. So dope. I'm surprised that there's not a car manufacturer out there that has a line of... I mean, there are ones that you can buy out there that are kind of like that, but there's not one that's like, they've just been making it looks like that for forever. And you know, for me, it'd be a BM. I've never heard of that before. Let's look. BMW R1300 GS. Okay. There, one time, I think that I was out in Missouri, so it was it was like 15 years ago, and I saw this motorcycle that was like, it kind of looked a little bit more like a Harley, I think I would say, like it looked like a bike that was designed for long trips, and it was very bulky in front, but it was very distinctly Japanese looking in the styling. And I thought it was one of the coolest looking things I've ever seen. And, you know, I've tried searching on... I've never seen anything remotely close to it. I've never been able to find it. Augusta Brutale 800. You have one of those? Oh, that's pretty cool. It's like a very different style, but it's super high tech looking. Wow. You think that it's a Suzuki B-King? Suzuki B-King? No, that doesn't look like it at all. Nah, that's not what I was looking at all. It was like it was a big bulky thing, and it had a lot to the front of it, and it came up high. You know, like a real man. You guys know a lot about my motorcycles. Let's look that up. Gold Wing motorcycle. That's a little bit more like it. I think that's really cool. That's an expensive motorcycle too. That's more like it. But it was more like, so it was the kind of that style. It was like a big bulky road trip type of motorcycle. But it was more anime looking, you know? It's a sofa on wheels. There you go. Yeah, it definitely wasn't that. Let's see here. There's different trims. Oh, there's only two. Automatic DTC. There we go. Now we go to images. It was that kind of a color. And it had like a really tall windshield. I'm sure that maybe part of it was custom. But there was something about it that was kind of like 80s anime retro looking about it. Air conditioning. Sofa on wheels, I agree. I don't know, man. I don't think so I tell you what, there was a time when I tell people that, you know, I'm gonna become a famous DJ, I'll have a villa in Ibiza and a Ducati motorcycle. But now I'm kind of scared to ride something like that, to be honest with you. What's a cafe racer? What is that? Oh, okay. No, riding a motorcycle is scary to me. Especially because I had a second cousin that died. He had a Ducati and he died riding that thing, man. That maybe is more like it. Oh, dude, I really like the stylings of that. It's not. I think that what I saw was probably closer to a Goldwing. I would say that it was kind of like a combination of the Goldwing and the Hayabusa. Is that how you seen that? Because like I said, it was bulky and it had a very high windshield in the front, right? But I really like the look of that thing, man. That's cool looking. That's cool looking. Especially look at that futuristic looking one right there. That's not like a real... That must be like a concept car or something, right? Okay, ZX14. If you're trying to post links, by the way, I won't be able to see them, right? Yeah. What do they got? You get choices. Yeah, I wish that they'd have one that just show us all of them. Riding motorcycles aren't dangerous. Everyone else is, so making it so much more dangerous. Yeah, that's right. And well, one of the things that I have to consider is that right now I don't go out a whole lot because any time that I'm not working, I basically have to watch the kids so that my wife can go out and get something done, like go shopping or whatever. But hopefully 5 years from now, that won't really be the case. I don't know how autistic Asher actually is, but hopefully that won't be the case then. And then I can go and do things. But I still don't see myself just going out for a ride in the motorcycle. I think the one thing that I could spend money on is skiing, so I could get snowboarding. LGX2 said, I know what it is, but I didn't hear your answer. Nope, wasn't like that. It was kind of angled and stuff. The Goldwing was the closest. Goldwing was the closest to it. Kawasaki Concourse? Oh, actually, that might be it. Yeah, actually, I think that is it. I mean, obviously, the model looks different now, but I think that is what I saw. Yeah, because I remember it being like kind of tall and having like this tall stuff on the side. I think that's it. Says that or Kawasaki Vulcan 1700. I'm just surprised you guys know so much about motorcycles. I guess I should, like, if that's what the audience likes, is that what would be... That's the thing I got to do is I got to go and get a really expensive motorcycle and make all of my videos on it. That's what'll bring the audience in, right? So there's a helicopter engine? What in the MTT? Okay. Whoa. Interesting. Oh, that actually is a little wild looking. No, I'm still thinking about this concourse thing. Wait, here we go. Not images. Go to all. Touring motorcycle from Kawasaki. Dude, this is not stopping this trend that we've got. That seemingly just popped up out of nowhere, and I was like, nah, this is like right where I turn around. I don't think that this is too late to jump on it and it's time for me to go, but it keeps going! Keeps going. Models. Electrically adjusted windshield. Saddlebags. Yeah, I could maybe do that. I don't think I'll get a motorcycle though. But now we'll see. I'm gonna be like browsing Instagram and TikTok, and it's gonna be giving me motorcycle ads now. Probably. Wow, 3.9 now. Well, there was about 14K on that move up, so that was about the amount of, buying or selling that we thought we might get. When I look at the 30-year, I kind of see it buying just pretty much all session, quietly buying all session. S&P 500 isn't doing anything. S&P 500 is kind of still tight. So I'm not 100, and NQ is like just barely green. So I'm not quite sure what to make of that. Some weird stuff going on. And there was some real like absorption against this thing too. This is curious. But the thing that I'm noticing about this is like we've had a couple of moves where like it didn't really actually go until like after 8:30 or something like that. Like it was very late in our session that it started to move, right? But I think I'm gonna have to leave it. I don't think I'm gonna take a trade today. I might not take a trade the rest of the year, to be honest with you. But we'll see. Anyways, thank you guys for showing me stuff about motorcycles. I will be back tomorrow. In the meantime, stay